Good morning, ladies and gentlemen, and welcome to the XPEDIATOR PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged. It can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin as well, we'd like to submit the following poll, and I'd now like to hand you over to Robert Ross, CEO of XPEDIATOR PLC. Good morning.
Good morning, thank you, and good morning, everybody. Thank you very much for joining us this morning. I will get going straight away, assuming that works for everybody. So this is a brief presentation on the trading update that we gave at the start of last week. There's our usual disclaimer, which is in nice big writing for everyone to read. So going on to the first slide. So as we said in the RNS, we're updating our guidance for the year 2020. We actually removed our guidance during the COVID, sort of main COVID period, but are now putting out guidance for this year. So in terms of group turnover, we're expecting to generate around 220 million of turnover, which is up from 213 million in the year to 31st of December 2019. And we expect to generate at least 6 million of adjusted pre-tax profit, which compares to 5.15 million for the year of 2019. In terms of net cash, we had 4.3 million of net cash at the end of June at the half year. As we mentioned at the half year presentation, we have ongoing annualized cost savings of around £500,000. When we listed with a progressive dividend policy. We want to continue that this year, and generally we look at 1/3 at the interim and 2/3 as the final dividend. So in very sort of brief summary there, we feel that we're very well positioned to come out ahead of 2019 for our 2020 results. And well positioned to move into 2021. So in terms of the XPEDIATOR business model, just to remind everyone about this, so we have a scalable and risk-adjusted platform. And what we mean by that is that as an asset-light business, particularly in our freight forwarding business, which is 75% of our turnover, we don't operate a large fleet of trucks and trailers. So we are able to scale back our operations to the extent that demand drops off. So we did see that during April and parts of May from a freight forwarding perspective. Volumes were down just mainly because of restrictions for drivers and people being able to move across borders. So we were able to scale that operating model down, and we weren't running with the large fleet of trucks and trailers. Obviously in the warehousing and logistics division, we have warehouses. We couldn't do a huge amount about that. We wrote to all of our landlords asking for rent reductions. Some of them came back and agreed to that, some didn't. So we believe we're very well positioned across the UK and Europe. We have our particular expertise and exposure to the Central and Eastern European businesses, which we see as favourable given the GDP growth that we see in Central and Eastern European countries. We obviously have a very well diversified customer base. No customer is larger than 2% of our revenue, and we have over 14,000 customers. So just touching on the group very quickly, just as a reminder for anyone that isn't aware. So we have three main divisions. So our freight forwarding business, which is 75% of the turnover, and I'll go into more detail on these divisions on the coming slides. Then warehousing and logistics, which is around 20% of our turnover, and then a transport solutions business, which is predominantly fuel cards for Eastern European hauliers. So our geographical split in terms of turnover is 60% Central and Eastern Europe and 40% in the UK. And just to touch on the numbers from the group from 2019, so 213 million of revenue, over 1,000 employees, and as I said before, 14,000 customers, and we have 38 offices and warehouse facilities around the UK and Central and Eastern Europe. So in terms of our strategic priorities, I'm very much a believer in focusing on our core products. So we want to be focused on our core services, which is freight forwarding and logistics, with the transport solutions offering an additional product to the hauliers that we work with. We're a business that generates cash. Very much keen to enhance our operating margins. My focus is very much on cost savings and making sure that we are delivering a better operating margin. Our technology is incredibly important. We're working on that all the time, investing in our IT platform, which again not only drives consumer and customer experience with our business, but also drives out cost. As always, underperforming business units are under review, and we have closed a business unit that was not performing well. It was only small. It's called Buzzbrand. We closed that during the first half of the year, and there is another business unit that is currently under review at the moment. Acquisitions remain a key focus on ours. We completed an acquisition of NID Transport in the first week of October. We're integrating that and already selling the services that NID Transport provide. And further cost savings will continue to come as our business units work closer together. We're currently looking to simplify the brands in the UK, both in the freight forwarding and the logistics parts of the business. And perhaps a sort of slightly counterintuitive statement, but COVID-19 actually came at a good time for the business. It allowed us to focus on our core services, allowed us to take cost out, and really focus on what we need to do and not be distracted by sort of new opportunities. So just a bit more detail on the three divisions that we have. So in terms of the freight forwarding division, which is our largest division and around 75% of our turnover, the services we offer range from groupage, which is 1 to 5 pallets, to a full trailer load business, and predominantly that is intra-European, so between Central and Eastern Europe and Western Europe, and with the UK now able to go to all European destinations as well. We also have fashion logistics via the acquisition of EMT, Easy Managed Transport, that we acquired in 2017. Obviously, that's a part of the business that's been impacted by COVID with the closing of the high street. So looking at the key strengths for this part of the business, so it's asset light, no fixed cost really in terms of trucks and trailers. There is some very mature businesses in Central and Eastern Europe, particularly Lithuania and Bulgaria, that have performed very strongly this year. And the services are very much linked with the wider business. So we do freight forwarding for our logistics business, logistics and warehousing division as well. In terms of 2020, so flexing our costs due to COVID, we saw good levels of demand in the first half of the year following the COVID period, and that's continued into the second half of the year. And we expect our revenues to be up around 10 million. Some of that will be from the NID acquisition for the 3 months in 2020, and the rest of that will be organic. So the Transport Solutions division, which is a sort of one-stop shop for hauliers for fuel cards, ferry crossings, insurance, and leasing and the like, that there was a natural slowdown with that during the pandemic. So our volumes were as much as 40% down during April. Those have now recovered fully to pre-COVID levels. The only dampener on this business is this business unit is that the fuel price also drives our profitability as well, and the fuel price remains depressed from pre-COVID levels. So this is the Affinity brand, so fuel and toll cards for European hauliers. So we have a database of around 2,000 Eastern European hauliers who've got 14,500 trucks. The business has been going for 18, 19 years, very good track record. It's very helpful to share that corporate intelligence, particularly during the pandemic period. We were able to know that which hauliers were running, which weren't. There is potential to expand these services further, and we're adding ancillary products such as VAT recovery and excise duty recovery for those Eastern European hauliers. So in terms of the 2020 progress for this division, it's certainly reduced volumes and lower fuel prices in the first half of the year because of COVID. As I say, those have now come back strongly. And we expect the revenues to be down in 2020. Profitability will be down as well, but good prospects for 2021 as this business comes back strongly. The warehousing and logistics division, so there was some impact from COVID, particularly in the UK with the social distancing requirements, and also with Palex, we did have some downturn for 1 month with lower volumes, but then that has come back strongly. So this is a warehousing and palletized freight express transport service, which we have under the Palex brand. We then also have warehousing in Romania and the UK. And in the UK, it's particularly exposed to the toy, leisure and gift market, which has had incredibly strong demand during October and November. So in terms of the key strengths, so Palex Romania has performed very strongly. It is record volumes this year again, and has just performed extremely well. Good management team and working very well together. We do have exposure to e-commerce, both in Romania and also in UK logistics. And as I say, demand has been very strong, particularly around Black Friday and during October and November. And we have UK warehousing capacity in place for Brexit. We're certainly seeing some customers already looking to bring additional stock in pre-Brexit. Some customers are splitting their stock. We have a strategic partnership with a company on the continent, and we are where customers are looking to split their stock, we're giving it to that customer, partner, and where their customers are looking to split their stock, that stock is then coming to us as well. So we will see how it goes from a Brexit perspective on that. So in terms of 2020 progress, a very resilient performance from the warehousing business in Romania and Palex. Import services has performed very strongly in the second half of the year, and we're looking at rationalising the warehousing into 2021. And we expect our revenues to be broadly flat, with increase in revenue in Romania offset by some reductions in the UK. So Brexit, which is obviously very much in the news at the moment, we do see this as a potential opportunity. For me, it's not something that we want to sort of put a number to. The most important thing is we support our customers during what will be quite a challenging period for them, and to make sure that their freight is moving between the UK and Europe. As a group, we are reasonably shielded from Brexit. 60% of our business is on the continent anyway, so intra-Europe, and around 20% is within the UK, being the warehousing business in the UK. So we're really only exposed to about 20% of our turnover to do with Brexit. We do see several customs clearance opportunities, though. There is scope to make more money on each consignment because there are customs clearance revenues, and we have a customs clearance staff in the UK and an outsourced team in Romania. And we have our customs clearance control towers to help manage those processes. We have ETFS facilities in the UK, which allows us to hold bonded goods in the UK, so that customers don't necessarily have to pay the VAT and duty until they leave the warehouse and leave the bond. We have AEO accreditation around in 4 or 5 companies in the group. And obviously, we're working closely with HMRC, with our IT providers, and with the industry associations to make sure that we're ready. We are as ready as we can be from a Brexit perspective. There are still unknowns, and still, in the news last night, is there a deal going to happen? Isn't there a deal going to happen? We are prepared for whatever the eventualities are, but we will need to be fluid, which is the message that we are sort of saying around the group. So in summary, we believe we're well placed to push on as a business. So we're going to deliver a strong performance in 2020, a robust performance. We have very clear focus on the core business and really focusing on the people as well, which is a very much on my agenda. We have a good mix of geographies, a good mix of services that represents quite a unique combination, particularly with our strength in the Eastern European markets, which are growing ahead of UK GDP. We're very confident in our future demand, and we have good mature businesses in Central and Eastern Europe and also the UK, and we should see further margin improvement into 2021. We have the full year effect of some of those opportunities. We have the full year effect of the NID Transport acquisition, and we see the business as an attractive mix of capital and income growth. So thank you very much. That sort of concludes the presentation, and I think we can move on to the Q&A session now.
That's fantastic, Robert. Thank you very much indeed. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated in the right-hand corner of your screen. But just while Robert takes a few moments to review those investor questions submitted already, I'd like to remind you that a recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I do hand back to Robert, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order the company can better understand your views and expectations. Robert, perhaps before we move on to the live Q&A, we had a number of pre-submitted questions ahead of today's presentation from investors. I wonder if I could just sort of run through a few of these with you, if that's possible.
Yeah, sure. Yeah.
Right. The first question we've got, do you think Xpediator has performed better than its peers during this extraordinary year?
Yeah, it's a very interesting question, that one, and in a sense difficult to say. You know, you look at other peers of ours and perhaps at other listed peers, something like Clipper, for example, have performed very strongly. They're very exposed to e-fulfillment, which is not something that we're as exposed to. But also, you know, other competitors who have got more sort of haulage exposure, we would feel that we've performed better than them. For me, a lot of this, though, is that we really need to focus on our business and make sure that we're well set up, we've got the right structures, we've got the right people in place, and that we can deliver what our plans are. And that's really my main focus. I would imagine we are probably, well, we will be better off than some and worse off than others, but really looking to focus on our products, which definitely an extraordinary year and certainly some extraordinary profits for some companies because of their exposure to e-fulfillment.
That's great. Thank you very much. Next one we've got here. Do you expect to make further acquisitions in 2021? Would they likely be similar to the NID transaction?
Yeah, so when we listed, it was under a sort of buy and build strategy. You know, we have aspirations to grow to be towards the £1 billion turnover target, and we're not going to be able to do that purely by organic growth. So we're going to need to do further acquisitions. We have a number of acquisition targets at the moment, both in the UK and in Central and Eastern Europe, and with the potential to move into new markets that we're not currently involved with. I think for me, the main thing from the NID perspective is that it was a transaction where the price was good. It added complementary services. NID is a very good business, well run, well managed, and a very good reputation and track record. So from my perspective, that's the type of business that we want to buy, where there is a good customer base, one that we can rely upon, you know, robust business. And so for me, similar to NID in the sort of headlines in terms of the core of the business, not necessarily a company that has you know, trucks and trailers with it, but certainly looking at further acquisitions, and it's very much a key strategic point for us.
Thank you very much. Next one we've got here is, what is the update on the CFO appointment?
Yeah, it would be fantastic to have a CFO, given that I'm a CEO and CFO really at the moment. So certainly from my perspective, been working very hard on this to have an appointment in place. So we have made an appointment, and we're just going through the final checks from a regulatory perspective. The candidate has accepted our offer, has resigned from their current role, and we're expecting them to start on the 1st of March. So they have a 3-month notice period. So we will be making announcements in due course when we've gone through the appropriate sort of regulatory checks.
Great stuff. Next one we've got here, if it's to be WTO rules for customs, do you think there'll be mass delays? And what are you saying to customers to get around the issue?
So our main thing to say to customers is to do everything they can to prepare themselves, and our customers are doing that. Do I think there'll be mass delays? Well, to an extent, that depends on what the French authorities allow. One thing I would say, and this analogy that someone I used to work for said as well, you don't go to the airport more than once without your passport. So you're unlikely to keep going back to the border to cross into the UK or into Europe without the appropriate paperwork. So yes, there may be some delays initially as people realise, well, I haven't got the right paperwork. What do I need to do? What does it all mean for those that haven't been prepared? But from our perspective, we will be fully prepared, and we will make sure that the hauliers that we are using are aware of what's required of them. But you know, I can't speak for other companies. Other companies may well not have the right paperwork, may well end up in delays, but people will lose patience with those companies that aren't ready, and will come to those like us who are prepared and ready. So, you know, that's part of the sort of opportunity around Brexit, that there will be companies who've just buried their head in the sand and just expecting everything to stay as it is at the moment. So yeah, in sort of summary, I do expect there to be some delays initially for those people that aren't prepared. But yeah, those should sort themselves out reasonably quickly, I would hope.
Thank you. And the final pre-submitted question we've got here. In the past, you've spoken about the importance of digitalization of the business. Can you give an update on what's happening in this area, please?
Yeah, sure. So digitalization is a really, really key part of our business. As I said, it creates significant efficiencies for us from an operational perspective. It allows us to reduce our headcount or not increase our headcount as our volumes grow. We have a quote system at the moment, which we've rolled out to certain customers for certain markets, which allows customers to get a quote. And I believe the average time for a quote is 38 seconds, which makes a pretty significant difference to customers who would normally be ringing up, their 5, 10 freight forwarding companies that they normally use to ask for a quote. By the time someone's answered the phone and you've shared pleasantries, you've probably done the 38 seconds. So from our perspective, this is people typing in that I have one pallet to go from the UK to Lithuania, for example. They put in the dimensions, they put in the weight, they put in the addresses of being picked up and dropped off from. And from our perspective, we then have all the information. It allows us to be very cost competitive with our customers, and it'll also allow us, from our perspective, to be much more efficient. So the initial step is the quote system, and then it'll be the tracking. So proof of delivery, they'll be able to receive over through our sort of portal. So yeah, this is really important to us. We have done a soft launch of the product. We need to then expand that out to the other markets and other customers, and there's still some work to be done on that, but it's definitely the future of it. The analogy that's been used previously is that you no longer really go to a travel agent to book your flight. You just look on the internet at one of the consolidators. So that's really the equivalent that we see, that people will no longer ring up and ask 5, 10 freight forwarders for a quote for their business. They will just go on to our quote system, or others have similar sort of things, and get a quote in quick time.
That's fantastic. That actually wraps up the pre-submitted questions.
Okay.
Perhaps I don't think you've had probably a great deal of time to look at the ones that have come in during the meeting itself. But if I could hand back to you and perhaps just read out who the question's from and the question itself, so all the investors can hear it, that'd be fantastic. Just work your way down that list, please.
Yeah, sure. So the first one is from Mazin S. So how has the second wave of COVID impacted Eastern European operations? So from a people perspective, we have had lots of people working at home. So where people need to come into the office, I was talking to the MD of Bulgaria a couple of days ago. He has 5 people in the office, but they're all sitting in different rooms, and everyone else is working from home. So it's certainly impacted our people, and we've supported them in every way we can from an IT perspective and from a mental health perspective, which is very challenging, particularly in the winter. Yeah, so that's sort of one aspect of it. From an operational perspective, our operations are running and are running well. We have good levels of profitability in our core markets in Central and Eastern Europe, and in fact, the numbers that they're producing are as good as we've seen earlier in the year before the second wave. So, credit to our team out there in Central and Eastern Europe. They've done a very, very good job. They run very good businesses. They work very hard, and despite the second wave of COVID. Okay, so that's that one. So Rob B. So Xpediator is acquisitive and seeking to consolidate a fragmented European logistics markets. What are your thoughts on M&A as we come out of the COVID crisis? So yeah, I think I've kind of touched on this already. M&A is a very key aspect for Xpediator as a business. We're looking at strategic targets, and we are actually looking at some that are off market at the moment, so not to sort of overpay. From my perspective, there are a lot of potential targets. We just need to make sure they're the right one, they work out properly, we can get hold of them as soon as possible. There may well be some opportunities in the sector as a result of COVID. Not really seeing any at the moment, because I think generally businesses in our sector are pretty busy. But as we come out of the sort of busy period, there may be some casualties with that. So So yeah, and then Rob B has also asked, can you talk about the mix of B2B versus B2C home delivery in the group? So we do very little home delivery. We're not a final mile delivery company. Most of our business is B2B from a freight forwarding perspective. And some of it is B2B in terms of the warehousing, but the majority will be B2C, you know, where we're picking goods for a company to sell to customers. So we don't actually look at the mix of B2B versus B2C, but as I say, no home delivery, but we have seen a huge increase this year, as you would expect, particularly in import services in Southampton for Amazon and for the toys, and that does change how we need to operate. So we are evolving our business as we see this change coming. So Mazin S, do you have any bad debt exposure to the UK high street retail? Were you impacted by the collapse of Arcadia and Debenhams? So yes, we do work with Arcadia, and we're not expecting any bad debt exposure. We are talking with the administrators, and before we release, we have quite a lot of stock with them as well. That we hold at the moment, so we'll make sure we get paid. There's more stock than amounts we're owed, so from that perspective, we believe we're covered. We have been impacted by the high street just generally. You know, our EMT business is a hanging garments distribution and processing business, so you know those revenues are significantly down. But we've taken quite a significant amount of cost out of that business. We've restructured it. We've got better IT in there. And the business is well positioned for we expect the sort of back end of the first quarter of next year to see some recovery in volumes. Rob B, with the DKV business, do you have any major competitors in the local market? Yes, we have competitors in the local market. You know, DKV are in Romania, but we have we believe a reasonably unique proposition because we're working with smaller hauliers who perhaps can't get credit from somebody else or need the assistance that we can give them that other competitors do not. So you know the Affinity business has grown you know year on year for a number of years. The only impact this year has been from COVID, and when you take out those COVID months, we're still ahead of last year in terms of volumes, with a really good pipeline of customers to join in due course. David F, Brexit, when you say don't want to put a number to, presumably this is revenue forecast, but all the necessary cost and infrastructure is in place to react to customs clearance, etc. So any revenue is pure upside. Yes and no. So yes, we don't want to put a number to a sort of gross profit figure because we don't know what the volumes are going to be. We have people in place already. We have further recruits joining during December. So we will have what we believe is the right number for the business that we expect, but this is a fairly unknown part of our budget for next year really. We do customs clearance already, so we have a customs brokerage department with our regional express business based in Southampton. We also do significant customs clearances for a number of customers in our freight forwarding business. So to the extent that there isn't the volume that we're expecting, we still have work for people to do, and we will just scale back the team that we've brought in. David F again, so considerable number of well-known retailers entering administration. How does this impact Expediator given historic focus on high street retail, fashion, logistics? So yeah, I mean, I guess I've kind of covered this point already, but you know, we do have a focus on the high street. It's not as much as it used to be. The EMT business, as I said, is the main exposure really in our fashion logistics. You know, those volumes are down significantly. As I say, we've focused that business. The team are doing an extremely good job there with what they can and being very sort of entrepreneurial and working with our customers very carefully. You know, the high street will come back, I'm sure, when we come out of COVID, when the vaccination is sort of rolled out and when shops can open again. So we did see during October volumes came back. We made some profit in that business unit in October, which was very encouraging. So as we get back into the swing of the seasons as they come in, we expect some good profitability growth from that part of the business. Stuart D, what's the exposure to high street retail versus online retail? So yeah, as I've touched on, we do have high street exposure, and in import services, used to do a lot of business for Toys R Us and the like. We're seeing more and more with retail. That does change how the business operates. So rather than sort of pallet picks and long runs of picks, it's much more shorter runs. So we're evolving. We're looking at automation, ways to take cost out of the business, to become more efficient, and just ensure that we evolve as our customers' needs evolve. Please, can you talk us through the roadmap to get to 500 million and a billion turnover, and let us know what profit might be at these turnover levels? Yeah, so for me, the roadmap is to firstly really consolidate the business that we have now and make sure that we've got the right structure in place to allow us to grow. So we definitely have that in certain areas of the business, with work to do in other areas. We will need to do a significant number of acquisitions over that time. Organic growth will come, but we need to do acquisitions, and really whether we get to 500 million or a billion really just depends on the size of the acquisition. So obviously doing a larger acquisition of the 50, 100, 150 million turnover would make a big difference versus a business like NID, which is smaller and sort of 10 to 12 million. In terms of profitability levels, I think a good level of profit in freight forwarding is looking at 3, 4, 5% in terms of net profit margin. In the warehousing business, sort of 9, 10, 11, 12, around that. So early double digits. And then from an affinity perspective, we make good margins on that part of the business, and much higher margins, just because we don't recognise the gross billings. We only recognise our turnover, which is a much smaller number. So, if we as a group were able to get to 4% on a blended basis on the sort of 500 billion pound turnover, I'll let you do the maths, Martin. And there's big possibilities there. For me, much more focused on profit rather than turnover. So, as a business, if we get to 200 million, 300, well, sorry, already 200 million. If we get to 300, 400, 500 million, for me, the most important number is that bottom line and driving that bottom line growth. Bob M, so many senior management changes. How do you reassure us that this is settled now? Well, I can only reassure you from my perspective, I've no plans to go anywhere. I thoroughly enjoy my job. It'd be fantastic to get a CFO in to take some of that pressure off me. I believe we're appointing a very, very good CFO who was only, like me when I joined Expediator, only had 2 jobs previously. So not somebody that's jumped around a lot. He is a sector specialist and working at a much larger business than Expediator at the moment. I can understand nervousness about a number of changes in senior management, but no plans now. Certainly from my perspective, got a settled team. Very happy with the senior team. The odd appointment, obviously CFO and 1 or 2 others that would still like to make, but we've got a settled team who are in agreement on the strategy, and we're moving forward in a very positive way. From my perspective, we're working on group values, which for me are incredibly important. People need to understand what we stand for as a group. We are a people business, and so we really need to look after our people and make sure that they're clear on how we operate, what we expect from everybody, whether that's colleagues, customers, or suppliers. So yeah, I can only reassure you that we are a settled team now. We're not looking to go anywhere, and yes. So yeah, I think that's all the questions. I've rattled through them fairly quickly, I think. So yeah, hopefully.
Thank you, Robert. You rightly said you've addressed all those questions that have come in. So if any further questions do come in, the company will obviously review all the questions submitted today, and we'll publish those answers on the Investor Meet Company platform. And Robert, perhaps just before I redirect investors for some feedback, if you've just got a last few words just to wrap up, please, that'd be great.
Yeah, well, firstly, thank you very much for joining this presentation. I appreciate it's been a very challenging year for lots of people, and I wish everybody a sort of happy Christmas and good fortune for the new year. Just from an Expediator perspective, for me, this is a very, very exciting business. We have a huge amount of potential. We have some mature, very good businesses in Central and Eastern Europe and some in the UK. We have very exciting prospects in other areas of the UK business and also Central and Eastern Europe. New markets that we can expand into, business units that are still to mature, so develop and grow and get to a point where they are at the right level in terms of size for their country. And we have a very good senior management team into my opinion, that is driven to drive quality and the right behaviours in our business. I feel very strongly about it, very passionate about the business, very passionate about the people and how we go about things, and making sure that we're structured appropriately with the right infrastructure, with the right IT and the right facilities and the right people. So it's going to take time. It's for me, this is a long-term project. I know there were challenges last year with the profitability and also with lots of changes in personnel, but we're very much focused now on our core product and delivering shareholder value.
That's fantastic. Thank you, Robert, for updating investors today. Could I ask investors not to close this session, as you'll be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting directly from the website, the feedback page will appear in front of you. If you've accessed from the link sent you in an email, you'll be asked to log in and submit your feedback. And please do so. It literally takes a couple of seconds, and the company do very much appreciate your views. So on behalf of XPEDIATOR PLC and Investment Company, we'd like to thank you for attending today's presentation. Thank you very much and good morning to you.
Thank you very much.